Hello everybody, welcome to another update on the stock screener. Today we're going to talk about Tech Lithium, an emerging lithium producer. So I have been starting to get interested in lithium because the fundamentals are improving. So why did I start to invest in lithium? That's because of this chart here. So we have already invested in copper. You can see the supply is going down, demand is increasing. We also have cobalt. So as you know, we have talked about capstone mining. Capstone mining has copper and also has cobalt. Both of these metals are going to go higher in the next years. But lithium is something that I haven't uh, thought about yet. But as you can see here, the fundamentals are really improving now. So first we have this yellow line. This is the stated policy scenario. Nothing very special here. Demand and supply is doing the same. But lately, Fitch has said that for a sustainable development scenario, we need to have multiples higher of lithium demand to do this sustainable development scenario, SDS. And as you can see here, we are already in a shortage next year. And this gap is going to increase. The gap between demand and supply is going to widen. So lithium is also becoming a very important metal. I think this commodity can easily double or triple somewhere in 2024, 25, and maybe even tenfold when we come in the 2030s. So I think it's a good time to start investing in lithium. The same is confirmed here. So demand expectations for 2019 was this. Now in 2020, the demand curve has gone up and it will probably keep going higher in the coming years. So the supply gap is going to increase. And there's not a lot of mine supply coming online. Okay. Now, why Tech Lithium? This is just a leveraged play on lithium. As you can see here, 2021, we had a rise in lithium and the same happened in Tech Lithium. So as this goes up, I expect Tech Lithium to go up as well. As you can see here, the market cap is 300 Canadian, 300 million. It's about 230 US dollars. And I think this is a good play to play the lithium price. Look at this man. This is Peter Thiel, and he bought 5% of Tech Lithium. So this is not a rookie. He is a co-founder of PayPal and Palantir, both very important companies. He's also the first investor in Facebook. So this man knows what he's doing. So Tech Lithium is focused on Europe. And why do we need to focus on Europe? As you can see here, Western Europe is going to have the largest share in the battery supply chain. So it's not Asia, it's not America, it's Europe. Europe is going to be the dominant battery producer in the future. That's important to know. We need to focus on Europe. Also, demand for EVs is going to rise tremendously in Europe. So this is the Europe line. At some point, this will be even higher than in America. Of course, China is the largest grower in EV sales, but Europe is the second one. And in 2030, the US will also grow higher. But here, in the coming decades, it's the growth in Europe. And Europe is also the battery supplier. Here you can see all of these battery production hubs. Tesla with Northvolt Volkswagen in Germany. Then we have Hungary, Poland, Spain. So Europe is going to become the battery hub. Very important. Now, what's so special about Tech Lithium? This is the first lithium hydroxide converted producer in Europe. So they're going to build the lithium hydroxide plant in Germany. And they are supplying the ore from Georgia Lake in Canada. They're going to create lithium sulfate from that, and they will ship it over to their plant in Germany to produce lithium hydroxide. So it is fully vertically integrated from producing to refining. And it's very important to know this is lithium hydroxide. There is a difference between lithium carbonate and lithium hydroxide. So lithium hydroxide is much scarcer than lithium carbonate, and it trades usually at a premium. Also, lithium hydroxide has more battery capacity and higher range than lithium carbonate batteries. And also the life cycle is much higher. So today we want to have EVs with higher range. Everyone wants a higher range. You don't want to keep charging and charging your car. Nobody likes that. So everyone wants to have a high range and a high life cycle, because you want to keep your car and not keep repairing and replacing the parts. So I think lithium hydroxide is going to go up in demand. It also has a lower production cost, so everyone wants to produce this version of lithium. It is also expected to grow at 30% CAGR per year, as opposed to 15% for lithium carbonate. So this thing here will grow much faster than this. And Tech Lithium is producing this. Very important. So you want to avoid companies that produce the carbonate. So let's talk about the project that they are developing. It's called the Georgia Lake in Canada, and it has the following resources. So with these resources, they have a mine life of 10 years. Of course, there is exploration potential, and I'm confident that this mine life will increase. Capex is $350 million. And well, they are trying to finance this right now. So they will get probably 100 million in subsidies, then 150 million in project debt, and then 150 million in equity financing. So as you know, the market cap is at 240 million. So there will be quite a lot of dilution, okay? But there's also upside, of course, because we have an NPV currently at 500 million. So we have a 240 million market cap, and the NPV is higher at 500 million. My valuation metric based on production and costs is also around the 500 million, 580. Also keep in mind this 500 probably without subsidies. So add 100 million on top of that. So you have actually 600 million NPV. Production will be around 15,000 tons. So that's enough for the 150,000 that they have. So that's 10-year mine life. They're now doing the pre-feasibility study. It will come out probably at the end of the year, and then they will start producing in 2023. So you still need to wait a year or two before this goes into production. But we are early. Now let's take a look at the valuation. So market cap 238. Currently the price of lithium is 15,000. So that's 500 million in NPV over 10 years. So we normalize this to 5 years, and that's 250 million worth today. Add some subsidies to that, and that's 350 million. So we are actually undervalued right now. 238 compared to 350. So that's good. We are certainly not overvalued. We are slightly undervalued. So this is how the cash flow is. First 2 years negative, and then they will start paying this back, and then they will become positive somewhere in 2028, and then they will have positive profits. But this is a chart for 12,000. So this is the feasibility study of 12,000, so somewhere here. But currently the price is 15,000. So this chart is probably going to do this, and then it will go up faster. Okay. Now, what is the sensitivity to the price? Very important. When we go up 10%, then the NPV goes up 40%. So there's quite a lot of leverage on this company. And this is charted here. As you can see, we are now at 92,000 yuan per ton, and that's about 15,000 USD. Now, if we go from here to the highs in 2018 at 170,000 Chinese yuan, then this is about 80% higher. So I have put this dot here. This is actually the price of 170,000 Chinese yuan per ton. That's 80% higher than this price. And as you can see, at this point, we have 1.4 billion NPV. Normalize this, divide it by 2, then we have 700 million, plus subsidies 800 million. So we can go from 200 to 800 million. That's a fourfold. Let's say threefold. If this lithium price goes back to here, then this company can threefold easily. Okay, so this is our premise here. We buy Tech Lithium because of the price leverage. If this goes back to these prices, then this company can easily double or triple. And that's the reason why we need to get into this company. Now, this is a timeline. They have the resources. They have a test facility. both working, and they have a PEA. Now they're doing the pre-feasibility study, which will come out somewhere at the end of this year. Then financing, that will be done next year. And hopefully they can start construction somewhere in the middle of next year. Then they will be producing in 2023. So if you want to get into this fundamental picture of higher lithium demand and want to play this supply gap, then Tech Lithium is something for you. Okay? And I'll see you in the next video.